Art Hogan joins us now to talk more about the sell-off on Wall Street today. He is the Chief Market Strategist at National Securities. Welcome back, Art. Nice to see you.
Hi, Sue. Thanks so much for having me.
Your reaction to today's sell-off, given the fact that this spat is playing out very publicly, was today's action appropriate or an overreaction?
Well, I think it was very appropriate, only in so much as we were really caught off guard by what I would characterize as escalation in trade tensions. So last week was a week characterized by things that were going to be important to us. The Fed, the earnings, 160 companies reported earnings, and then we got a jobs report. And none of us expected to have a drive-by tariff announced and have this trade with China escalate to the point that we don't know how bad it gets now. That's the problem. We saw the exact same thing happen in May. Over a weekend, we found out that trade talks had fallen apart, and then we escalated on tariffs on the first $250 billion. So remember back in May, we sold off about 8%, where we feel like we're in that same position where we need to recalibrate valuations in markets to adjust to the new news that's in front of us today.
Where do you go to hide? Bonds went up. I mean, the interest rates went down. Gold went up today. Are those the safe havens that you look to, or what do you do?
Yeah, those are safe havens that are very, very crowded, Bill, and that's what I get concerned about. I think in the near term, you wait for this to wash out a bit. If you want to hide, I would raise cash levels. I would certainly not chase things like staples, which are very expensive right now. I think some of the other dividend darlings are getting expensive. I think after a couple of days and we see how much of this needs to work itself out, we'd have the ability to say, you know what, healthcare looks very good, and it actually outperformed today and is very defensive.
Art, if you are a longer-term investor, how do you harness this volatility and, say, take advantage of the sell-off that we saw, for instance, in some of the big tech stocks and the like?
Yeah, I think that's a really good point, Sue. And I think one of those things you want to think about is, name the 3 stocks you don't have in your portfolio that you've been thinking about. Find a price that you missed in the past. Apple falls in that category. Amazon is under a lot of pressure. Facebook, those types of names that have never been in your portfolio, they're going to come to you at some point in time. Sharpen your pencil, make that list. If you're a long-term investor, also don't change your game plan because of the kind of volatility we're seeing. We've had 5% drawdown since 2009. This is another one of those. This too shall pass. In the long term, you don't want to change game plans because we have recent volatility.
Very quickly, but it's different this time because a currency devaluation affects all countries, not just the U.S., and all markets went down overnight and this morning. So this is really becoming a global issue now, isn't it?
It certainly isn't, but I would argue, too, and I think that's completely correct, I would argue, too, that this has been a global issue for a while. The 2 largest economies in the world are in a trade war, and that trade war just got worse, not better. We're escalating that trade war. China's devalued the currencies before August of 2015, and we had a 10% drawdown in markets then. It also passed, but this is another flavor of that same medicine.
Art, thank you so much. Art Hogan with National Securities.